Welcome back to the Daily Crypto Roundup, the show that brings clarity, context, and calm to the fast-moving world of digital assets. And today, we've got a really interesting blend of stories that help explain where the market stands right now and where things may be heading as we go into the weekend. We're going to be talking about a huge institutional story with 21 Capital preparing to list on the New York Stock Exchange with nearly $4 billion worth of Bitcoin on its balance sheet. A major development from the Bank of America wealth management world as they open the door wider for crypto, the new Kraken and Deutsche Börse partnership bringing traditional finance and digital assets closer than ever before. Russia's VTB Bank signaling that it wants to offer crypto trading to its clients. The quiet but meaningful drawdown in exchange balances suggesting accumulation under the surface. The major new CFTC-driven initiative for regulated spot crypto trading. And Italy launching a formal review into crypto-related financial risks to determine how tightly they want to supervise the space going forward. It's a full slate, and each of these stories helps explain why the market is behaving the way it is this week. And before we get into all of it, a quick message for everyone listening right now. Today is the last day to get your comments in for the Friday XRP giveaway, which we announce tomorrow. If you haven't already, please take a second to scroll down, rate the show 5 stars, and comment, "Done," or anything you like. We have stalled just slightly this week on the ratings, so if you're listening and enjoying the work we put into this every day, that small tap on your screen genuinely helps push the podcast back up the charts, and it gets you entered into the draw tomorrow. 10 XRP goes to the comment of the week, 5 XRP goes to a second listener completely at random, and you'll hear the winners announced in Friday's episode. So thank you in advance. Every rating and comment makes a difference. Alright, now let's get into the market picture, because this week has been a bit of a journey. We had the heavy drop earlier in the week, Monday being the real moment where sentiment fell off a cliff, and the market got punched right in the chest. Then Tuesday, we saw a real rebound across the board. Bitcoin pushed back into the 93,000 range. Ethereum recovered its footing above 3,100, and several altcoins snapped back from their lows. And today has been a very different tone entirely. Steady, flat, controlled, almost like the market is taking a breath after the panic and after the rebound. Nothing explosive, nothing dramatic, but also nothing falling apart. And sometimes, that kind of stillness after volatility is more important than another big green candle, because it shows whether this recovery has any real weight behind it. And today, so far, the stability has been holding. At the time of recording, Bitcoin is trading around $91,800, just sitting under the 92,000 range it hovered in earlier. Ethereum is holding around $3,117. XRP is moving in the $2 zone, sitting around $2.09. Solana is holding around $139. Cardano is at around 44 cents. Dogecoin is around 14 to 15 cents. BNB is just under the $900 area. Polkadot is around $2.28. Everything is calm, steady, and nothing is sending any major signals of stress or instability. And for a post-rebound day, that's actually what you want. So let's get into the first major story today, and this one is significant far beyond just the headlines. 21 Capital is preparing to list on the New York Stock Exchange with a nearly $4 billion Bitcoin treasury on its balance sheet. That's not a typo. $4 billion worth of Bitcoin. This is one of the largest corporate BTC holdings in the world, and now it's about to become part of a publicly traded entity on one of the biggest stock exchanges on the planet. What this does is give traditional institutional investors a way to gain exposure to Bitcoin through an equity structure without having to directly hold BTC themselves. It also signals something deeper, that despite the ups and downs of the last week, and despite all the volatility we've seen this year, the appetite for Bitcoin-linked financial products isn't slowing down. If anything, it's accelerating. And anytime a company with this scale of Bitcoin exposure goes public, it becomes another reference point. Another benchmark that Wall Street watches. MicroStrategy was the first. Others followed. Now 21 Capital joins that story, and this could shape how institutional portfolios position themselves going into 2026. But that's not the only traditional finance story of the day. We also have major news from Bank of America's Wealth Management Division. They're expanding crypto access for clients, which is a big deal because traditionally, the big American retail banks have been extremely cautious about allowing direct or even indirect exposure to digital assets. This move doesn't mean they're suddenly offering altcoins to every customer, but it does mean that high net worth and wealth-managed clients are being given significantly more freedom to explore regulated crypto products within their portfolios. And anytime a major US bank like Bank of America opens even a crack in the door, history shows the other banks tend to follow within months. This is one of those slow-moving but powerful stories. The infrastructure gets built quietly, and then one day, you wake up and 10 million more people suddenly have access to something they didn't before. We are going to pause here and take a quick break for a word from our sponsors. Stay with us.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Now we go to Europe, specifically to a partnership that caught a lot of attention today. Kraken and Deutsche Börse have announced a new initiative to bridge traditional markets and crypto trading infrastructure. Deutsche Börse is one of the most respected and highly regulated financial institutions globally, and for them to work directly with a major crypto exchange like Kraken signals a clear direction of travel. Crypto is not being treated as an outlier asset anymore. It's being integrated into the same framework that handles equities, commodities, clearinghouses, and institutional flows. Over time, this kind of partnership can help improve liquidity, tighten spreads, bring institutional oversight, and support cross-market products like tokenized assets, crypto-backed ETFs, and potentially regulated derivatives. It's not a headline that makes retail traders jump up and down, but it's exactly the type of development that builds the scaffolding of the next bull cycle. Now let's shift the focus over to Russia, because VTB Bank, one of the largest state-linked banks in the country, has signaled that it wants to offer its clients access to Bitcoin trading. This is fascinating because Russia has had a very complicated relationship with crypto over the years. Sometimes they restrict it, sometimes they embrace it, sometimes they ignore it. But what you're seeing now is a major state-aligned bank saying they want to give everyday clients direct exposure. And regardless of your views on the Russian financial system, what matters here is the global trend. Everywhere you look, crypto is moving deeper into the infrastructure of banking. US banks, European exchanges, and now Russian banks. Adoption is not moving in one straight line, but it is moving steadily forward, even in countries where regulation has been inconsistent. And speaking of adoption, let's get into the story that may be the most important for understanding the tone of today's market. Crypto exchange balances are continuing to fall, hitting multi-year lows. Now, for anyone newer to the space, that doesn't mean something is wrong. It means the opposite. When coins leave exchanges, it usually signals accumulation. Buyers removing assets from trading platforms and moving them into cold storage, long-term wallets, or institutional vehicles. It's one of the most reliable long-term bullish signals in the entire ecosystem. And even though prices have been shaky earlier in the week, this metric has continued trending in the same direction. Downward exchange balances, upward conviction. Next up is something that could reshape the US trading landscape entirely. The CFTC has greenlit regulated spot crypto trading on futures exchanges. This is a massive step for market structure in America. It means that trading venues that already have regulatory clearance to operate futures markets can now offer spot trading of digital assets under strict oversight. So rather than crypto being siloed into offshore platforms or lightly regulated exchanges, it can now be traded through institutions that already have deep compliance systems, surveillance infrastructure, and transparent reporting standards. Over time, this could lead to more legitimate liquidity, fewer manipulation concerns, cleaner price discovery, and more confidence from institutional investors who have been hesitant to engage with crypto because of the reputational risk of some past exchange failures. And the final major story of the day is coming out of Italy, where regulators have launched a formal review of crypto-related financial risks. This might sound like a negative headline, but it isn't necessarily. Every time a country takes crypto seriously enough to do a deep dive regulatory review, it means they're preparing to integrate it into their financial system, not ban it. Italy wants to understand how crypto interacts with traditional banking, how it affects credit markets, how stablecoins might influence monetary flow, and what consumer protection frameworks they need to update. Europe has been ahead of the United States in regulation for years, and moves like this show they're not slowing down. And for anyone who's been in crypto long enough, you know that when governments start reviewing crypto risks, it usually precedes clearer rules, and clearer rules precede clearer inflows. When you step back and look at all these stories together, they help explain today's steadiness. The market isn't running, it isn't crashing, it's absorbing information. Big institutional moves, big regulatory shifts, big infrastructure developments, and it's doing it in relative calm after a rough beginning to the week. Monday was the fear moment. Tuesday was the recovery. Today is the digestion phase. And if you're long-term, this is exactly the kind of day you want in a volatile week. A day where the market proves that yesterday's bounce wasn't just a one-off reaction, but something with a bit more backbone behind it. And as always, thank you for listening. Don't forget, today is your last day to get your 5-star rating and comment in before tomorrow's XRP giveaway announcement. It takes 2 seconds, it helps the show grow massively, and it enters you into the draw. And we'll be back tomorrow with another update, another round of stories, and another look at where the market is heading next. As always, we will see you at the top.